Hi dear audience, my name is Alexey. In this video, we will discuss several examples of using one of the key trading tactics which is applicable in any markets and time frames, that is a breakout trading. In order to determine the direction for trading, it's necessary to plot the next support and resistance levels and wait for the market to overcome one or another level. The price must be closed above the upper border of the resistance level to cause a buy signal appearance. If the price breaks through the support level, this means that it's possible now to open a bearish position. Now we will take a few examples that show the advantages and disadvantages of the breakout trading. The first financial instrument is a pound to dollar currency pair. The market was in a flat for a long time. The price was in this price range beginning approximately from the 20th of January until the end of February. In such moments, it's impossible to trade in the market. After this, the horizontal resistance level was formed. As you know, the most reliable levels are formed in case there is a clear market reversal. The upper border is determined along the shadow of the candle which is involved in this price reversal. This is the price 1.2571. The lower border is plotted along the bodies of the candles, that is 1.2555. After the upward movement, the rate of the pound began to fall rapidly against the dollar. At this point, a new level appeared. Just a few days before, support level was formed in the candles from February the 20th and 21st. The lower border of the level was 1.2385. As you know, it's plotted on the lowest shadow of the candle. The upper border was 1.2403. It's plotted along the bodies. Just a few days later, the market broke through the support level. After this bear candle closing, we could say that a bear trend emerged in the market. The buy positions were no longer relevant after the candle closing. It was necessary to consider only bearish entry points. After the market was closed below the level, traders who prefer a breakout trading are ready to enter the market. There is still another aspect, that is, to calculate the potential of possible profit and risk. To do this, you have to set the distance to the stop-loss order, which I recommend to place above the upper border of the resistance level when opening a sell position. In our case, the stop-loss size was about 200 points. In order to be able to open a position, it's necessary that the price movement potential, that is, the distance to take profit, be at least double the stop-loss. In our example, the profit potential is about 317 points. The target is determined by the nearest support level, which is in the range of 1.1988 to 1.2000. This is a classic level which is determined by the aggressive bull impulse after a long-term decline in prices. Did the effect of the level breakout take place? Yes, it did. The question arises if it's possible to open a position. The stop-loss is approximately 200 points. The price movement potential is about 370 points. The risk-reward ratio 2:1 is almost met. Therefore, we can open a sell position. The only thing left to do is to calculate the volume of the position. I recommend to start risking not more than 2% of the capital per trade. Let's take one more example when the breakout trading tactics doesn't justify itself. We have the silver market, the daily time frame. After the candle closing on August the 9th, our support level was formed. I will underline the lower border of this level because the candle, being its base, was almost closed without a shadow. This is a classic level plotted onto bear and bull candles. Later, the price was moving up for a while and then it was at one point. Afterwards, the bear candle was closed on August the 19th. After the candle closed, the market reversed and a sell breakout signal was formed. Before opening a sell position, you have to determine where the potential target is and at what point to liquidate the position if the market moves in the unfavorable direction. The primary target is the next support level, which was formed on the 17th, 20th of June. The lower border of this level was 17.10, the upper border was just a few points higher, that is 17.13. The resistance level is close to the point of the breakout. Its upper border is 20.47. The lower border is 20.10. Stop loss is always placed above the upper border of the resistance level. Its size is about 120 points. Take profit is 220 points. But again, when breakout trading on the daily time frame, it's difficult to get a risk-reward ratio at least 2 to 1, since the size of the stop loss doesn't often allow it. In my opinion, when breakout trading on the daily time frame, it's quite possible to trade when the risk-reward ratio is slightly less true, for example, 1.n to 1 or 1.9 to 1. Therefore, having calculated the position volume, you can enter the market. The price is falling for some time, and then a deep correction starts. This happens, and experienced traders know there is no need to panic in such situations, as the correction is a normal process. You can always get out of the position if the market reverses, in other words, break through the opposite level. Until this moment, the trend remains unchanged. It's necessary to be able to hold a position to the established targets or liquidate it if the trend direction changes. The next impulse wave was formed in the market. Afterward, the correction started, and then the market dropped down and touched the support level. Take profit in this price movement could be reached in the candles that were closed on the 6th and the 7th. The breakout position could be closed. In this example, the distinctive feature of a breakout trading is clearly shown. That there are a large stop loss and frequent corrections that appear directly after entering the market. The breakout trading justifies itself, but you should be able to hold a position, and it's desirable to search for an entry point at the beginning of a trend in order to get the highest possible risk-reward ratio. Let's analyze the disadvantages of the breakout trading tactics at the example of the daily time frame currency chart for the euro to the Australian dollar. The support level was formed, the lower border of which was 1.4454 and the upper border was 1.4499. The level breakout occurred on January the 3rd after the buy candle closing. The trend changes and sell positions become relevant, and a breakout signal is formed. We will determine the point of the nearest target in accordance with the nearest support level. The upper border of the support level is 1.4148 and the lower border is 1.4090. This is the closest target for sell position. The next targets can be set according to the levels of the larger time frames. As in the previous examples, we will calculate the risk size as to the upper border of the nearest resistance level. The upper border of this level is 1.4719. The lower border is 1.4598. The distance to take profit, or in other words, the price movement potential, is about 250 points. The upper border of the resistance level is 1.4719. The stop loss order must be placed with a small gap to this border. Therefore, the distance to the stop loss is 320-330 points. The potential for price movement turned out to be less than the risk size. In this case, you cannot enter the market as the minimum risk-reward ratio isn't met. The basic principles of risk management are not met as well. In such situations, you can search for entry points on smaller time frames or wait for a bounce signal. We'll talk about this in the next videos. Let's summarize. The advantage of the breakout trading is that you can participate in the market movement, making profit if the price moves actively in the direction of the trend instantly after the breakout. The disadvantages of this approach lie in the low risk-reward ratio in comparison with the rebound trading tactics. In addition, young traders are not often psychologically ready for market corrections, which sometimes start immediately after the level breakout.